We're live. We're live. Okay, now let's promote. Okay, let's ask everyone to promote. Okay, already promote. Hi, time for you, Warren.
Yeah.
Hello, everyone. Thank you for joining our live stream today. First of all, I know again we are late for 3 minutes, but this is not due to my fault. So, Alvin, explain.
Sorry, I just ended one of the events and come to hotel. Yeah, just before 5 minutes. So apologies.
Yeah, Warren can justify. Meina was very on time. Open the live stream right
Yeah,
at 45.
This is
I should
true.
beforehand
Yeah.
like 5 to 10 minutes next time. Yeah, make my word.
Okay, thank you, Alvin. Stick to your words, okay? Every single
Yes.
audience of Guardians Echoes gonna remember those words, and then it will be also clipped into our short clips so that you will be tagged.
Oh, yeah. Just got snatched up. Yeah, no worries.
Okay, but anyways, jokes aside, right? Yes, it was Alvin being late, but it's okay. We forgive him. Today we have a very special guest on our live stream, Warren. Da 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 da. This is the right direction, right? Warren, you wanna do
Welcome.
some welcome self intro, three
Sure.
sentences.
Thanks. Yeah. So, my name is Warren. Been in a space for about 5 years. Joined Gauntlet the start of the year to kind of open up the APAC business for them. So I've been out here trying to figure out what exactly the angle should be. Think I have a bit more of a direction now. And really excited to be on this call to also speak about what happened 2 weeks ago. Yeah, that's pretty much me.
Can you share a little bit about like what Gauntlet is? Because a lot of our audience, they're just non-Dijon users. So maybe share like why you from the Gauntlet can speak on this specific topic.
Right. So actually, funnily enough, we were in the office last week for an on-site, and this was right after the event on Friday. They kind of did a whole walkthrough with everybody about what exactly happened, and we've been through this with the teams also to understand how this impacts everybody's markets. I'm more on the sales side, but from the conversations that we have and from what I understand. I think we have something to talk about today, definitely.
Oh, I'm referring
In
to what Gauntlet is. Just
right,
tell.
in terms,
Yeah.
yeah, I'm going to that. So in terms of Gauntlet and who we are, we started out 2017, 2018. Back then, we're mainly doing uh, risk consulting. We did that for a few large lending protocols. Beyond that, we kind of grew into looking at different other sorts of protocols like large DAOs or layer ones to also support them with risk consulting. About 2 years ago, we kind of shifted to look a little bit more at TVL products. So this is where we started curating on platforms like Morpho, where we create products leveraging that knowledge in the risk space to be able to help users make money on their stablecoins to start. To date, we do lots of different trades, but the background that I gave you before is important to kind of set the context for like the DNA of the company and how it is we sort of shifted into this TVL focused business. Today we manage about $1.6 billion. We do this across lending products. So on Morpho, that's where most of our lending products sit. We also have some delta neutral strategies on Drift. So those that would be relevant to the conversation that we'd be having in a little bit. We have some symbiotic products, and we've recently launched RWA products as well. So we're kind of trying to grab the market and bring in relevant products that we think would make sense with blockchain. Some of them are new, like the RWA side, completely new. I feel like I'm building a car. Nobody knows exactly the parts that go I think that's okay. It's hard. That's how we grow. In terms of other products, we've been in those markets for quite a while, so we have quite a lot of learnings. But we definitely learned a lot from the recent crash as well.
Got it. So just pick out several keywords for you guys. Gauntlet currently manage 1.6 billion. And in fact, like a lot of the Mofo TVL are managed by Gauntlet vaults. So they help to manage the collateral or auto rebalance the collateral behind different strategies on behalf of a lot of protocols. And then they have also very large quant team to do a lot of mathematic calculation as well as model optimization and fine-tuning the parameters of like say LTV ratios for different DeFi protocols. So I think you guys have been in the crypto space for many years, but famous for risk management for DeFi. Okay.
Yeah,
Yes, that
actually,
is
I have
absolutely
a
correct.
pretty strong impression of a period when Morpho TVL surpassed Compound, and when we dive into the auction proposal, and when we know that Gauntlet played an important role at that time. Yeah.
I mean,
Yeah,
Alvin,
thanks for
what
that.
is Gauntlet famous in Taiwan?
Maybe not so much because maybe for DeFi players and smart players, they will focus on the changes within like different proposals, auction proposals. Yeah, so maybe it's the niched audience, yeah, of Chinese market.
Yeah, in my interactions, if I'm honest, and I think I can be frank here, like we mostly the guys that have been around for quite a while would know Gauntlet. A lot of the new entrants some may not understand even what Morpho is, and therefore hard to understand who curators are. A lot of the exchanges, for example, starting to just look at DeFi. Some of the OG guys within the exchanges, for sure, are very familiar with us, but there is some education as this space is we're quite niche and deep into the DeFi ecosystem.
Yeah.
Yes. Yeah. Okay. So I'm ready to jump into my questions, but I know for your marketing PR reason, please make your disclaimer now, Warren.
Yeah, absolutely. I just want to share that everything that I share here today are perspectives of my own. This is not of Gauntlet, and I'm not offering any financial or legal advice. Our conversation here is only for educational and entertainment purposes, not a solicitation to buy anything. If you have questions about Gauntlet, feel free to reach out in Twitter.
Yeah. And also, just a disclaimer from me and Alvin, we're not paid. Okay. We don't charge
Yeah.
anything for audience
Yeah,
echo.
we're only like the second episode of the streaming, so
I mean, we technically speaking, Alvin, we can charge, but I don't think
not
that's the purpose of
yeah.
our stream. What? Have the confidence, Alvin.
Yeah. Actually, I run a podcast for 3 to 4 years without any pay. Not so many paid advertisement previously. So
Yeah, because our goal for Guardians Echo, again, as we said in day one when we sent out an announcement, is we want to provide the objective, the expertise, the insider insights into DeFi, into CeFi. So the last thing we will want to do is we take some advertisement and become the sharer for some specific protocols. That just defeats our purpose. Also hurts the audience confidence and trust in us in the long run. So we will never do that. And if one day we're gonna take grants or sponsorships, I will make it very big, like ABCDE, boss ABCDE sponsored us. This episode is sponsored by ABCDE, so you guys will know exactly where our ass sits at. Okay, but now it's unpaid, and I also told Warren before we start the live stream, it's like don't give us some like PR bullshit. Like if you don't want to say something, don't say anything. But giving like the PR mass answer is the worst thing because it's just a waste of everyone's time, right? Here, people are here want to hear what our true thoughts are. Like you can filter your thoughts, but not fake thoughts. Anyways, okay. So before we jump into like the like what are the reasons? Maybe let's give a breakdown into what happened like 10 days ago when a lot of market makers and retails as well as wells got liquidated.
Yeah, so I think it's a combination of things. Definitely Trump's tariff announcement had an impact here that caused a crash wide across the markets, not just the crypto markets. But in terms of what might have accelerated things within crypto was what specifically happened on Binance. where there was a large liquidation when there was a large sell of USDE. USDE is Athena's stablecoin token. Part of the reason why that large sell only affected Binance and not other venues was because Binance had an oracle setup that was not calling from the same places as other oracles on chain, and this kind of exploited the people exploited this system, or it seems to be that people exploited this system, and that caused subsequently liquidations of up to like 1.9B across the whole ecosystem, because the liquidations here cascaded into many different altcoins, especially the smaller ones across different venues, where many people who had orders or longs in leverage positions were then basically forced to liquidate. So that impact definitely would have caused quite a lot of teams to go into a war room scenario where they have to deal with what has happened here. I don't think we've seen this before within the market, but that's pretty much sums up what happened.
So when you said the total number of getting liquidated is actually 1.9 billion, is that like a number that you guys internal track, or is it like from some specific source?
No, I've been following a few folks online, and basically that's a number that seems to be consensus on Twitter at least. So I'm quoting myself. Sorry, cascaded into 500 to 1B enforced liquidations, cascaded into 1.9B plus globally,
Got it.
119 plus globally. Yeah.
And then you said a lot of like projects actually went to war room. So what happened? Like, what were you guys doing at Gauntlet when this happened? Because I'm pretty
Yeah.
sure your internal risk managers got pinged or got caught up, right? Midnight.
Yeah,
Right.
very
I mean,
interesting.
okay, so I think there's a few elements to this, and this kind of touches on what our risk management framework looks like. I think the first thing that I would state is that most of risk management actually is done beforehand. It's done in the prep. And there are two sides to this, because two of the major sides that were impacted at Gauntlet were either the lending, the lending products that we have, or the perps product. And then on the lending side, fortunately, the markets were not as impacted, and we did have to watch how things are on chain, but fortunately we did not allocate to many altcoins. Most of the altcoins were the ones that faced these sorts of liquidations and then potentially bad debt. Apart from that, I think broadly just the risk management procedures that come in. To give you some context, I get probably requests for every week new tokens that people want us to supply to, and there's a whole list of diligence that my team needs to go through in order for us to even allocate to it. So that's kind of where I say like the work comes in beforehand, and I'm not belittling that work, because that really does take quite a bit of time. And so on the lending side,
Just to clarify, Warren, so when you say you get requests for you guys to supply to, is like because you guys work with a lot of wells, so like you can supply those liquidity into those pools, is or what is specifically was that?
yeah, so for example, somebody launches a new token and they want to create a market for it so that they can borrow against it. They would basically reach out to ask whether or not we would be able to supply to that market. In order for us to supply to that market, we would need to do diligence on a number of different things. Who this team is, why would these guys want to even loop? Is there like a rational trade behind this? How much liquidity is there on chain? Are the contracts audited? A number of different things that we have to run through before we can say, okay, we're comfortable allocating to something like this. Ultimately, we're protecting customers' funds, right? We have like 1.6B in our vaults, and we are making sure effectively that we would not encounter a situation of bad debt.
But Warren, what's the procedure? Because I assume when you manage clients' funds, when they come to Gauntlet, they say, "Oh, we want to supply." They already have a specific token. They say, "Oh, I want to hold." Maybe they just want to hold like stable coins, right? Maybe they just want to hold ETH or Bitcoin. Like for altcoins, how you guys want to do it? You will do the risk assessment, assume everything passed, and you will create the vault or the strategy or the risk management around it, and then will you pitch to the clients?
Right. Actually, so mostly on the Morpho side, just to understand the flow here, we have stablecoin vaults that are risk tranched into three different tranches: Prime, Core, and Frontier. The Prime vault will allocate to very blue chip like WSC, ETH, WBTC, etc. So those ones pretty much were pretty clear. It's the Core and Frontier where we meet newer assets. And that's where we have to do diligence to decide whether or not to allocate to them. So we're not pitching LPs to say like, hey, there's this looping opportunity that you should look at. It's more so much that we are trying to bring in the supply side of the market in order to then supply to loopers and people who want to borrow from the market. So typically on the borrow side, if we get approached by somebody that wants to have stable coins allocated to them, part of it would also require that they have known demand that will come in. It's not like we're launching a new market and they think that there are going to be people that loop. Usually it would be ideal if we are aware that there's going to be X amount of demand, and we can then plan out how we want to whether we want to allocate, whether it passes our diligence, and then how we want to allocate after that, like which vaults do we deploy into and how much do we deploy.
Okay, cool. Please continue. I just want to, I guess, like pause you so that you make some clarification for the audience who is watching this, right? To give them more background context.
For sure. I mean, the two products that I'm talking about, one is the lending side, the one that we just went through. Basically, we take on stable coins, we lend it out to people with collateral assets. Everybody that we lend to is putting up their collateral in an over collateralized manner. And we monitor a number of different things to ensure that there isn't going to be bad debt. Now, on the other side with the perps, we do have some trades right now that are basically on drift, and they're managing delta neutral strategies there as well. So that's the one that probably is a little bit more interesting here, because when that happened, basically what the kind of situation that we went into was taking stock of what exactly happened to our positions, figuring out, are we still in a delta neutral position or not, and then figuring out how, like, understanding where the market is, what exactly happened before we decide what to do. So in the case of most folks that are managing delta neutral positions, when this crash happened on October 10th, the ADLs would likely have triggered a situation where teams were no longer in delta neutral positions. And so their job then was to figure out how to quickly get back to that delta neutral position, at least for us. I mean, if you're a prop shop and you run this strategy, maybe you play it a little bit differently. But we have stated clearly what the intention of our vaults are on drift, and we managed to weather the storm, basically.
Can you give an example? Like, let's say when the crash happened during that time, what is the per position you guys were be holding to and then to maintain in a delta neutral manner? What were you guys longing? What were you guys shorting? And why does the pricing or the Oracle pricing like cause a lot of problem for the market makers?
Right. So maybe I will start with the Oracle pricing. The Oracle pricing on Binance triggered mass liquidations on many different platforms. Those liquidations then moved folks that were originally in delta neutral positions to not be in delta neutral positions. When that happened, basically we have to figure out how can we get back to delta neutral by doing a number of things. We have to figure out how much is the gap and how we should stagger the positions so that we would go back to parity. But doing all of this is really quite complex. I can't give the details, unfortunately, about the exact positions we were in or what longs and shorts we had to do. The war room, my understanding, lasted for a decent amount of time, and so this was something that we did not take lightly. But I think most of the market was shocked by what had happened here. So basically, now, going forward, I think people are going to be looking carefully at how auto-deleveraging works on every different venue so that we figure out how exactly that we can handle the situation. The only other caveat that I would state is that curation is kind of a business where in 100 days, 99 days, everybody kind of looks like a genius and everybody makes money. Most people that are managing these trades all are doing fine 99 out of 100 days. It's the one day like this where we are faced with a novel situation, and the team has to have two things done in order to, I think, successfully weather this. First is all that management beforehand to ensure that we've mapped out different situations. In this case, ADL, I think, shocked a lot of people. But for the most part, on the lending side, I think because of our diligence beforehand, that kind of saved us a lot of ache on that end. On the perp side, with this new situation, now that it's come in, the preparation doesn't stop there, because let's say we were hit with this situation, or we were hit with this situation where we're no longer in a delta neutral position. I think the question then becomes, what can we do exactly, and what operational safeguards are there in place to ensure that we're not overstepping when we intervene with whatever systems that we currently have in place. So that also takes quite a lot of preparation, and we did learn a lot from this. But at this level, the conversation I'm talking about is really more relevant at the trading teams level, and really more relevant to folks that are managing similar positions like this. Broadly, if I were to speak in a way that I think most folks would understand. Yeah.
I understand. I think there are
if I was
several
speaking in a way
things
that most folks will understand, basically.
Am I experiencing the lag, or is Warren having the lag? Alvin, can you confirm?
You mean from
I can
which
hear you
side?
now.
The string.
Just
yeah.
now, you cut for a bit, but I can hear you now.
Yeah. I don't know if it's my internet, but I think like I think there are several things I want to break down, right? First of all, for the long short position, I mean, based on my knowledge, like just to briefly touch what ADL is, right? It's usually a market maker say for the same asset, maybe they are holding the spot of, like, let's say BTC. Let's use a smaller coin. Let's say they are holding spot for pound, right? But then in order to not having exposure, directional exposure to pump, then maybe they will do a same size of short on pump. But ADL happens is like when a market crash, something happens like that, right? Some users, maybe they are getting their margin call, or they are going to get liquidated. But when things happens a lot, then the pricing is kind of like uncertain. So in order to avoid the situation happens where like all the users who are losing money can still pay to all the users who are making money. So the users who have like huge shorting positions will be starting to be ADL'd, meaning like they will be forced to liquidate or like to close that position. But the pricing of like how you close that position is not, technically speaking, it's not that transparent, or it's not fair. I don't know if this is the word, but I would say fair, because like basically it's pretty much whoever has the control of that ATL mechanism, how they set it up. Like if it's on chain, if you know the rules, maybe it's a bit more transparent. But if it's conducted by a centralized exchange, then it's like a purely black box. And they will start to close the biggest short position, and then so that like they don't earn that much money, right? And then the users who lose money, they will have enough to cover like all the losses, so that the money, there wouldn't be much difference in terms of like the money they need to cover. And that's why like a lot of market makers get fucked. Because for example, if you short a token at like $5, right? And then maybe like originally your profit is like from $5 to $1. You have like this $4 difference. You're sure will be printing, but you maybe then like the judgment from the central exchange or whatever trading menu you have, maybe they close your position at 4, but actually real time that position is like $1. So how do you cover the difference between the $1 to $4? Because you're still holding that specific spot, right? I think that's the mainly like a lot of those like market makers or liquid funds are arguing. That's why like they were talking a lot about the ADL mechanism, no matter from like a central exchange perspective or decentralized exchange perspective, right? And then okay, so go back to the second thing I want to get a little bit more clarity is you say the trading team. So you guys internally have a trading team to manage all those like long short positions, right? But also like when you say your interview being, is it like, oh, you want to build a system that's like gonna automatically tackle those market crash so that like you have minimal intervention, or what is it? And also like there will be other, I guess, vendors or protocols or partners you guys are working with. Do you guys also give advice to them?
Sorry. Okay, the last part cut a bit. There will be other vendors that I got everything else, but you said there will be other vendors, and then it cut out.
Yeah. Is it my internet? I'm sorry, guys. So, okay.
No,
All good
Looks
now.
like
I'm
All
it's
good
not
now.
sure. It might be mine.
yeah. So there will also be a lot of
I hear
other
you
partners
clearly.
that you guys are working with. So do you guys also like give advice during that time? Because technically speaking, when you are in the war room, like with exchanges or with the vendors, it's a lot of people all together.
Right. Yeah. No, absolutely. So in terms of the exact dynamics of whether or not we had consulted other teams, I don't have visibility into that. In terms of how we want to manage it going forward, I think that's basically your question. Basically, like, do we want to build automated systems here that manage everything, and where can human intervention kind of come in? The long story short here is basically, when we think that it will be, in an ideal world, we will be able to model every scenario. We will be able to figure out the ADL mechanism at every venue that we look at so that we can manage this. At the same time, however, we understand that this is likely not possible, nor kind of futile in terms of an exercise. So what we do, it doesn't mean that we abandon this modeling process. In this case, now a lot of attention is drawn to ADL. So I bet a lot of teams are going to be grilling publicists about how exactly the ADL mechanism works, so that they can model the probability of something like that happen, and then start scenario gaming. What would happen if our delta neutral position shifted this way or that way or whatever? And then they would then have, at least how I would think about it, is that we would then have a branch of options that we would be able to follow, and all of these options can be done in an automated way. However, I think the biggest thing that we do here is that people are way more malleable and flexible in situations like this, especially when we hit very super normal or out black swan event type of things. ADL actually is not a typical thing that happens. It's supposed to be quite uncommon. So in the case of how we would plan moving forward, there will be the automated systems will start to account for the ADL tracks and how they work, as well as also account for, in the event that something like this happens, how should we react. But at the same time, even for our current processes, while a lot of things are automated, we still have traders that are actively monitoring the system to make sure that they react in a way that they should. Crypto is ultimately still, I wouldn't say in its infancy. DeFi has been around for, you could argue, 2 cycles now, and it's gone to a point where we've have a lot more attention and larger serious players trying to come into the space. But that doesn't mean that we haven't had our bugs to kind of work out. Actually, this stress test, I think, is ultimately a positive thing for the environment. Our team definitely is reviewing this and making plans going forward to account for this. But at the same time, do I think that we will not have situations like this where trading teams are caught off guard? I don't think so. I think that the market will always throw at us something different, and it's almost impossible to account for every scenario. So while we try to automate everything, or while we try to automate as much as possible, we still have folks that come in to monitor the situation and wargame and decide whether or not we should follow the automated path or we should abandon ship, and what are the sort of guardrails in terms of how it is we deviate from the suggested models.
Okay.
Yeah.
Okay, I think that's enough about ADL, and I feel like for risk management side, or even the trading side risk management, this is a forever topic. Like even the Web2 traders, they after so many years they haven't figured out, oh, we can automate every single like risk management system. Like how can we do it with such a more like immature industry with crypto? But with that being said, like from the institutional side, we know, oh, you guys have experience tackling with this, and so far Gauntlet's track record is almost, I would say, impact, right? You guys almost avoided most of the major market events historically, and it's all can be traced on chain as well as can be traced back with historical data. But I know, like Alvin, we have some like question from the retail side, right? Do you want to ask a
Yeah,
question?
yeah, for sure. Because there are like the normal DeFi users in different communities, they may not so familiar with like the mechanism of like what Gauntlet works or any partnership with other DeFi protocols. But they, I think the question they all want to know that how can they prevent, like what are a few risk red flags they should pay attention to before depositing their funds into different protocols, because we all may encounter this kind of problem in different scenarios we mentioned previously.
Yeah, if I'm honest, the brutal answer is that it's extremely difficult for an average DeFi user to understand the risk that they're getting into at a similar level that somebody like Gauntlet does. We take into account many different things, and I'll give you a shortcut to this so that DeFi users kind of have a way around it. But to give you a sense of what we look at the team that is putting up the strategy, the audits for whatever assets that we are planning to invest into. We look at the DEX liquidity on chain and the Oracle setup to understand how exactly the price would move so that we can model out whether or not we think that it would be a safe asset to invest in. I think the shortest hand to kind of assess whether for DeFi users are two things. One, does the strategy make sense? Like Ethena is a pretty simple strategy. We can explain how that makes money. We understand it. It may be a little bit of a black box, but we still understand it. Broadly beyond that, Pendle, I think also relatively most DeFi users would be able to understand how that works too.
Yes.
So can I invest in a PT token on USDE? Well, I think the next question to ask yourself is on-chain liquidity. To understand whether or not you have the ability to pull out of this in the event something does go wrong. Now, does this mean that you are free from risk? No, because you're probably not at your computer 24/7, nor do you have systems set up to tell you about these things, but the yield that you get from it is sure juicy. So you kind of have to do that risk management on your own to decide whether or not it's something that is relevant. But I would say the general rule of thumb is understand how the product actually makes money. You can do a little bit of proxy to kind of get a sense of whether or not people think from a security standpoint it makes sense. You can check out Gauntlet Vaults. Do we allocate to these as collateral assets? That would be one way of doing it. You can see where else this asset is within the DeFi space. Who is interacting with it? Are these players known to be quite diligent or not? These proxies are quite make things a little bit easier for average users that may not be looking at this at a deep level.
Yeah.
Help us a lot. Thanks for the
Yeah,
input.
I think to be honest, right, this is also the reason why I'm building Spiral, because essentially I 100% agree with you. Like if you are a retail user, or you think you're a DeGen user and you think you're good at risk management, but when facing a market condition like that, as a retail user or even as a whale without any like deep connection or any special agreement with the vendors that you are working with or trading on, you basically are, your assets are in the hands of other people's decision, right? If anything happens. And the only choice that left you to do is okay, maybe you can claim on Twitter, oh, this happened, this is not fair, but well, you get the money back, right? That might be your life savings. This is not a joke, guys. Like,
Yes.
you see so many good traders. It's not because their trading strategy is not working. It's because your trading tools are not working. And there's no way to hold your trading tools accountable, right? For that. So what can you do? I think at the end of the day is we let the experts handles the risk management. Let the people who have been doing this for many years, at least they have the experience, they have the deep ties, they have the special agreement that have been done with those different venues. So when that things comes, at least you have someone to fight for you, or you have a basic understanding of, okay, the similar condition maybe happened historically. Here's a solution that can partially mitigate this condition, right? And then as well, we also integrated like Gauntlet's vault on base, because we trust Gauntlet as a risk management partner. All I'm saying is let the quants do the quants thing. Maybe you think like in the short term when you buy the YTPT, you get the juicy yield of 30%, 40%, or 70%, but you are managing duration risk. And as Warren mentioned, like the on-chain liquidity, maybe now today you see, oh, there's 100 billion on-chain liquidity, but when things happens, if nobody like, I think DeFi is still gonna working, right? It's because it does not rely on certain like Oracle, but if the liquidity is like dependent on some third parties, like so, and the pricing is dependent on some oracles, then you're fucked. And then are you sure you can get out of your position quickly? Maybe if you have several $100s, maybe, but if you have bigger than that, like I think you may want to take a second consideration into how you allocate your funds.
Yeah,
And on the other side, yeah, go
Mhm.
ahead.
No, sorry. I was just gonna say that I get it too, because I was a DGen in the space early 2021. I remember overestimating how much liquidity there was. I was in Ohm trying to get out of it when I was part of it was looped on Rari, had to pay an insane amount in gas fees. The congestion is also something else that you have to take into account. There's so many things. It looks like it works right before you kind of test the situation, but when you test it and everybody's trying to get out, it's a whole different ball game. So you're definitely taking on risk, but at the same time, you can make money from these things. Like I made money. I did make money. I probably didn't make as much as I could have, but at the same time, this is kind of the space that you're dealing with, and you are taking on a lot of risk entering the DeFi space as an individual retail investor, but you can still find it, I'm sure.
And then, I mean, I guess like in terms of, can you maybe name a couple of red flags that potentially like retail users should pay attention to when they deposit fund into a DeFi protocol?
Yeah, absolutely. I think most of your viewers would be able to spot this, but I think just run through how exactly these assets will generate yield, and ask yourself if you think that is a valid way of doing it. I think that's like my first litmus test. If I'm honest, some stable coins that launched, and I will not name names here, but there are some stable coins that launched where the backing of their stable coin is in quite questionable and risky trades. Another example is that, and this one I will name the name, but I think it's also a pretty strong protocol and has a lot of liquidity. I think most people don't underestimate the operational risks that comes with something like an Athena. Managing cross-venue delta neutral positions is not an easy task. Speaking to a trader that was basically had to do this on a smaller scale, already I can understand that it is not something that teams can do very easily, especially in situations like this. Fortunately, nothing happened here, but broadly, what I mean is that we tend to miscount the risk or misprice the risk quite a bit. So understand at different levels how exactly the strategy would make sense. The other one, the easy red flags are basically proxy. Who else is invested in this? What protocols or what curators are supporting this? You can use them as proxies to whether or not it is relevant. If you do see curators or you do see auditors that consistently fail, then maybe that's a bit of a red flag too. So those are
Where
broadly
can
what
they
I would say.
check the historical data? Because I don't think there's any like websites say, oh, this auditor, this curator failed at this like market crash.
Right. Honestly, that list, I think, also a moving target. You kind of have to be abreast with the market. I know that there's one website, I'm forgetting it now, that has tracked almost all the hacks and crashes and also details why exactly they happen. That is a pretty useful tool. Rekt.news is that tool, rekt.news. I think that's a relevant resource to kind of understand like the mishaps that happen within the crypto space and understand like what happened behind it to then also figure out whether or not you're taking on risk. Yeah, that's the website.
Cool. Yeah. I think this is pretty neat. Maybe can share the screen. Let me.
Oh, I love this website.
Yeah. You guys see?
Yes.
So basically, it talks exactly okay what happened, right? I was impacted by this AWS thing, but okay, we have a centralization issue.
Yeah.
Yeah. I mean, I think like guys, feel free to go to this website and explore all the major news that happen in the crypto space,
Yeah.
right? Who are the curators? Like even though they claim they're the best curators, but if they still lose money for you guys, ditch those curators, right? And then who are the protocols that actually their user funds are safe, right? What are the vendors or the parties that actually like protected user funds? But the sad news about crypto is because it's I think like some of the sectors are just dominated by one or two players. So it's I don't think you can find your eventual fairness from that perspective. Okay.
Mm, well said.
Going back to our questions, right? Then, I mean, I guess like let's talk a little bit about like what are the common mistakes that you guys have seen from DeFi teams when it comes to manage their systematic risk and the liquidity incentives. Because like DeFi is a space a lot of like builders are trying to build. Like for Sprout, we are a consumer app building on top of those DeFi protocols. And we constantly engage with different DeFi protocols. We also do our own B2B due diligence, talk to the team. And obviously, every single time we talk to the team, even just by the way they describe their incentive program or describe how they manage their protocol, like how they handle client requests internally, we can already tell, okay, whether we want to work with this team in the long run, right? For example, like recently, I don't want to name drop, but I was testing another DeFi protocol because we were planning to deposit Sprout's money into that, right? I'm just like testing with my personal fund, but after I tested their product, my money got stuck there because they have some like front end error for now. So far it's already for 5 days, and I reach out to their Discord, Telegram, and Twitter, right? I would be like, hey guys, can you get my money out? Like this happened, da da da. They say, oh, this will take 7 to 10 days because the error you caused or encountered is like 0.1%. I'm like, how can me as a normal DeFi user cause a 0.01% of error? Is it because I'm a good product tester or what is it? I got so pissed, and in my mind I'm like, okay, I don't want to work with this team anymore. Like even if maybe I get the money or like I solve the bug, but it's just like, to me, it's some kind of like incompetency, if you know what I mean. Maybe I'm too judgmental, but this is the thing we're gonna test with like different B2B partners, right? How they react to bugs, how they react to like immediate or certain urgent situations that need to face, because we have to embrace the volatility of the DeFi market. And the only way we can filter out who can actually work with us is who knows how to handle the variance in volatilities. So going back to the question, what are the most like common mistakes that you think DeFi teams are having when they manage like systematic risks?
We talked about it earlier, but you'd be surprised as to how underestimated this is. But basically, underestimating how quickly DEX or liquidity in general can vanish, how high slippage can be. To model this out, usually models are a lot more conservative than what actually happens. Additionally, also with longer tail assets, the beta they exhibit is way higher. So we saw price dips in some coins up to like 90%, which is probably over what folks would have modeled out. So I think this is kind of the major thing, like what I talked about earlier, and I think it's ultimately still relevant. Curation doesn't look like it matters 99 out of 100 days. It's that 1 in 100 where you have to figure out, or you have to hope that you have trusted your money with a team that is cracked, basically, and that can figure this out. Because this is a completely new sort of financial system that we're building out, where we have to take into account many different new variables. That's kind of the DNA of where Gauntlet came from, like risk consulting before, and we're applying it here. I'm not gonna say that we are able to predict everything and can make sure that we will never be folly to any of these situations. But I can tell you that within the space, we're probably one of the most diligent teams that try to account for many different situations here. So I think both from a retail and DEX teams, both teams underestimate how bad things can get when a market does crash. Most of the time, when in those 99 days, this really doesn't matter, because the fires that you're putting out are tiny, and additionally, it's not like the whole building's on fire. Whereas in this situation, the whole building and the whole city is on fire, and you have to figure out how to navigate that whole landscape. Whereas the other 99 days, it's usually a small fire that most teams can put out themselves. I wouldn't use that as a marker to claim that they are a competent team. However, I think an example that you brought up is also fair. Like, do they have? Why is a normal transaction 0.1% error causing? That should be a scenario that should be planned for. So some little markers like that might give you little tidbits, but if not, it's kind of hard to tell. You have to watch during the bad situations to kind of see who weathers the storm the best, who gives you the most transparent information, and yeah, how they've dealt with it.
Yeah. I mean, maybe I'm just like a crazy user. I test the product in the most extreme way, not because I want to piss them off. It's more because like every day I'm also testing my internal product, right? And I will try out other people's product to see what they do good, what they do bad. So I will just do very weird things across different, and to figure out, okay, is this button working? Is this button gonna work under like this scenario?
Yeah,
But
I think every product owner or founder should do like this. Yeah, you're right.
yeah, so I don't only piss off other teams, I also piss off my internal team. Not piss off, I'm just giving the advice. Here is what happened after testing.
Positive feedbacks.
It is. And going back to like what you said, right? I think maybe we can shed a little bit more light on what composes a risk management team, right? Because when people think like they will think just like one quant, like doing all the risk analysis. No, okay, you think about what you need to manage DeFi and CeFi risk, right? You need really, really good quantitative analysts or like people who have experience analyze both on-chain and off-chain data. And then you need also like kind of a data engineer, data pipeline engineer to consolidate all that together for you together first. And then you building models, running simulation models on top of that. With that being said, it's all like probably like time series data. So it's very large database. You probably also need someone with like machine learning expertise, what I used to do to build models to simulate those risks. But with that being said, there's never like a 100% accurate model you can build. And then on the other side, it goes to the execution, right? Because you also have your own trading team to manage the long short positions, the leverage, right? Then based on what your trading team, the information, the mechanisms, or the factors they provide to you, you write that into the code. So you may ask the developer or ask the, I guess, like a trading system builder, you may also make mistakes. So you need like take years to back test whether the execution of those modeling and the execution of those trading systems gonna work. Okay, that is dependent on whether the system that you are trading on top of is also reliable. If something happened like several days ago when AWS shut down, nothing works. Okay, like maybe 9 out of the 10 training venues you are training at shut down. So I'm just talking about like all those different modules that you are interacting with while you're dealing with the risk management. And this is not the full picture, but imagine that, right? This is already a huge team to manage the risk. Warren, you have anything to supplement on that?
Yeah, I mean, I would say that I was a lot more of an active on-chain trader before I joined Gauntlet, and then I realized how difficult it is, and I realized that I have very little edge. It's the same with like it's the same with like trading just generally coins within the crypto space. Like when I met quants and traders, I realized that if these are the guys I'm going up against, I have like no edge. And in the case of risk curation, quite similarly so. But the difference is you have variance, right? You can make money. But if you made money, you are probably lucky. Depending on how sophisticated you yourself are, then who becomes your edge? Your edge is basically the less sophisticated guy. So I would bet on teams that I'll put it this way: we had an offsite in April. That was the largest concentration of math majors that I've ever been around in my life. And the conversations that we were having were really, really interesting. I was playing poker with them, and they were telling me, actually, you are practicing one of the theorems within math, but I don't know what it's called. So like basically nerds that are trying to figure out how best to navigate this market. And I'm not going to pretend that I'm as smart or am able to do what they can do. So I'll just leave that risk management to them. I think there is already yields that are in some sense alpha. Like if you think about it, over collateralized lending at 8+ to 10%, I think I kind of think that's mispriced. Like I feel like should the market really start to mature and start to grow out, we start to see that rate come down quite a bit. So there is already alpha within the vaults that folks are curating, in particular some of the ones that we do. But yeah, that's pretty much I would say. What I would say, it's a difficult task, and most people don't understand it, and most people misprice the risks that they're taking on. You can make money, but you're taking on a ton of risk, and it's also your money. So it's up to you whether or not you want to take on that risk. Nobody can stop you from doing that.
Yeah. I'm taking a different approach for my followers, guys, for the audience. Just listen. You need to survive both the bull and bear market. Also, as a crush, think about your girlfriend, boyfriend, your kids, your wife,
Think
your
about your
husband.
family.
Yeah, think about your family, your parents. Yes, I think most of the time you feel fake because you feel like you're gambling your internet money. But it's not fake. You live a life, right? You need to eat food. You need to live in a good apartment, in a house. You need to provide for your cats, your dogs. How can you just like gamble your money so relentlessly without any understanding about the risk? Like I'm in the opposite. Like I will pitch. I will every day talk to my audience. Like think about your family, think about yourself, think about your life, manage your risk. If you don't know how to manage your risk, go use a vault manager or go use Sprout. Like us, we handle the risk, we handle inflation. We make sure we are working with the best risk managers in the space so that you can chill at your beach or chill on the street drinking your coffee. This is not a joke, right? If you start to change your mindset today, 20 years later, 30 years later, you'll be chilling at your big ass house with your with your grandkids, with a happy life instead of living under your parents' basement.
With the cats.
Come on. I'm very serious. Like, if you guys literally scroll through Twitter during the last several days, it's heartbreaking. Like the stories, even the big chaos they're sharing, they were like, oh, some chaos were sharing, I earned maybe like 10 or 20 million, like during the last several years, but one night it's all got wiped out. How does he or she feel right now, guys? So I know, like, on the internet you feel, oh, you're having fun, but this is not about fun. This is your real money. This is maybe your life savings. Anyways, this is not financial advice, but think about it. Think about it. Really think about it. Okay. I know we only have probably like several minutes left. Warren, like, is there any closing marks you want to speak to the audience? I know you're sure about the fact, like, after you have seen those quants or traders, like, you don't want to go up against it. You just want to work with the good strategy. But any other advice?
I mean, so the only thing that I would say is that fortunately, I think the job that I have allows me to travel quite a bit, and going around Asia, Europe, many different places, I can honestly understand why people think that they should be taking on this amount of risk and why people want to go for that moonshot. I'm in a similar boat with Meina here in that I think it's much more prudent to put your funds in something like Sprout, or go to Gauntlet's vaults and explore yields there where you do trust professionals with it. That being said, I think the situation out there may not be great from like a macro perspective, and I understand where folks are coming from. The only thing that I would say is that if you really did want to do it, really do it with a small amount to learn how you would have gotten wrecked. I personally got wrecked in my cycle before. It was not pretty. I grinded my ass off to get to where I am today. So yeah, I would give that some serious thought. I understand where folks are coming from, but we don't necessarily need to take on that outside risk with such a large portion of our bankroll. I'm a poker player, so bankroll management is an important part of playing poker. You don't play the biggest game in the world because you only have one shot at that game, and there is variance in what you are doing here on chain. So put most of your funds in safer options, even diversify beyond crypto, and then put some of the funds if you wanted to try and see your luck and see if you can make it. But yeah, that would be my advice.
Thank you, Warren. Very good view. By the way, what are the blinds you play right now for your poker? What are the blinds?
Varies. I hardly play now because of Gauntlet, but yeah, it varies.
Because of Gauntlet?
Singapore, yeah,
okay.
Yeah, there's yeah. If you come to Singapore, I'll host.
Yes, please. So I used to host poker games, of course, with no profit. Okay, I don't take any like rebates or anything. But now, because I'm building, I don't have time. And I think like poker is really a game that like if you don't play for a really long time, you kind of suck at it. And then you need to get back to the game and then start to like remember all the combinations, all the odds. Like every morning you come up and memorize okay, this is the probability of me joining like my space for the on the
Yeah,
river.
yeah,
Like, but
yeah.
Alvin, you have been very quiet on this live stream, and I want to give you the next 5 minutes to share your
Okay,
thoughts. Mm,
let me go
please.
through any like interesting questions. Oh,
Or maybe
I
just share your observations so far with your community, right? Because you manage such a large community in Taipei, and also like your audience or fans also trust a lot of your judgment. Like, how are they doing so far
yeah.
after the crash? Mm.
Yeah, the interesting thing is that because nearly half of the audience of our community from Hong Kong, and they used to get familiar with different protocols like many years ago, maybe 2 years, because so many centralized exchanges just banned the Hong Kong users at that time. So I think that's also one of the strengths they have. They get familiar with all the DeFi protocols compared to other regions like Japan, Korea, and Taiwan at the time. So um, this time maybe they now make got so destroyed by the disaster this time. And I can also feel that most of the community members like feel so sad about this time, but I think it's also a good lesson for them because they need to learn how the mechanism of each protocol works and what's the differences between like stablecoin of Ethena, USDE, and others. So I think if um, they can survive with this disaster, they can be better with the coming years. Yeah.
Yeah, I think at the end of the day, everybody pays tuition in the crypto space. But what really matters is how much tuition do you want to pay out of the pocket? Do you want to pay all of your
Yeah.
Yeah,
all of
I think
your
a good trader is not good at is not licensing how they can earn with a single with their funds, but with how they wanna risk with every trade. So I think the risk management is one of the is the most important strategy we need to learn, no matter in crypto space or other things. Yeah, compared to
yeah.
how we can how much money we can earn. Yeah.
Yeah, the risk and rewards ratio. And Sprout
Yeah.
is exactly the product help you to understand yourself, and you can track it real time in our app. So
Yeah.
so
Exactly.
not sure, okay, but take a look at it, and maybe this will help you to save a lot of time. So that like maybe majority of your fund, your core position, can be just earning safely, but then a small set of like the position you can use it on prediction markets, on perp decks, whatever you want to farm, and go from there. But with that being said, like I think like what will be helpful, like maybe next time during our live stream, sometime next week, when we can actually review some of the products, DeFi products, together with the
Oh,
audience live, right? We will
yeah, for
demo
sure.
it. I will also demo. I will demo you guys how I review or test out the product, right? And I will critique. Okay, this is the button that shouldn't or should appear here, and I will also show you guys how I see. Oh, check the on-chain liquidity, like whether I can understand the
Yeah,
mechanism on.
we can like we can form a bucket list for checking all the metrics of different protocols. I think every DeFi newbie should they need you they need these kind of things to help them.
Yeah. I have the list of product I want to test out. But Alvin, please also collect it from your maybe audience perspective. Like what do they want us to try out in terms of product? And then we can do
Mm,
the live stream in both Chinese and English. But
yeah,
again,
that's a good idea.
thank you, Warren, for coming on our live stream. Like really appreciate your share your personal view, not Gauntlet's view about risk management. But again, like thank you for telling us like what happened inside or during like the war room time when the crash happened. And I hope like Gauntlet gonna keep its great business, like in the long run, keep your intact track record in terms of handling DeFi risk, and then make Sprout and Gauntlet gonna have like a long term great partnership. We truly respect like how you guys are managing the risk, and then we already integrate your vaults as part of our core strategies in our closed beta, and we'll be sure to promote it to our retail audience too. Cool. Okay,
Very
I'm gonna
cool.
end the live stream now. Guys, if you are watching this, please like, reply, and retweet or comment, whatever it works for you. And also make sure you follow me and Alvin. You can also follow Warren. I tagged him on my first tweet regarding this like banner. So please give everybody a shout out and stay safe out there. Don't gamble your money again, right? Buy a good meal, buy a nice bottle of bubble tea, enjoy your day, come back with a clear mind, and then make decisions on your funds. This is not internet money, it's your generational wealth.
Yeah.
Bye.
活下来最重要。